instead of defaulting, instead of outright hyperinflating in your face, they'll revalue gold, which will create massive inflation, but will enable them to pay off a large portion of the debt. And I think that's what we are seeing. And I think you go back to 1974 after we were off the gold standard already. So they're calling it a reserve creating instrument. Gold is eternal. They understand this. The big money understands it. And he who has the gold and the commodities makes the rules. And all of the metal is heading eastward. So I would say and I don't want to go out on a limb, but I will and say, by this time next year, wouldn't surprise me one iota if we saw gold revalued to a level that would shock people.
AndySchectman, a highly respected figure in the precious metals industry and the founder of Miles Franklin Precious Metals, has long predicted that the price of gold could experience a dramatic revaluation shortly. As the global financial landscape shifts, Schectman emphasizes the growing importance of gold and silver, mainly as Russia and China aggressively accumulate these metals. The eastward flow of precious metals, combined with the strategic actions of central banks, signals a potential turning point in the global economy. Gold prices extended their gains on Thursday, fueled by expectations that the Federal Reserve may implement an interest rate cut in the coming months. Following the latest U.S. economic data, traders increased their bets on a rate reduction, which drove gold higher during the North American session. The precious metal rose 0.67%, reaching $2,624 after rebounding from a daily low of $2,603. The economic backdrop is shaping up to support Schectman's predictions. August's U.S. inflation data came in slightly hotter than expected, with the consumer price index rising by 0.2% every month, surpassing the consensus forecast of 0.1%. Meanwhile, core CPI also exceeded expectations at 0.3%. This inflationary pressure was tempered by softer-than-expected jobs data, with more people applying for unemployment benefits than anticipated. This labor market softness could push the Federal Reserve to lower borrowing costs more aggressively, a move that historically benefits gold. Schectman believes that central banks are quietly accumulating gold and underreporting their purchases. He thinks that a global debt crisis could lead to significant inflation and prompt a gold revaluation driving its price. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
We talk about going all the way back to, and I may have read this on your show before, but for those who didn't hear it, it's worth repeating one more time as we sign off. And this was a conversation between a man named Thomas Enders and what's his name? Kissinger. And it was a meeting that they had, and this was from the Freedom of Information Act, meeting they had in 1974. And it goes like this. Mr. Enders says to Kissinger, it is against our interest to have gold in the system because for it to remain in it would result in it being revalued periodically. And although we still have some substantial gold holdings, a larger part of the official gold in the world is concentrated in Western Europe. This gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. And Kissinger says, but that's a balance of payments problem. And Mr. Enders says, yes, but it's a question of who has the most leverage internationally. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. They're going to revalue the price of gold. I believe that in my soul. And when you see the central banks of the world, who are the most well-informed traders on the planet, not only wickedly accumulated at a level that is increasing year over year, month over month, day over day, hiding how much they're really truly accumulating, and then speaking continuously of gold being held in the revaluation account and the prospect of indeed revaluing it, it will happen. I do believe that. And they will use it to reliquify the system, which will create massive inflation. But it is something that I think that they will do. It is a way of maybe option 3. Instead of defaulting, instead of outright hyperinflating in your face, they'll revalue gold, which will create massive inflation, but will enable them to pay off a large portion of the debt. And I think that's what we are seeing. And I think you go back to 1974 after we were off the gold standard already. So they're calling it a reserve creating instrument. Gold is eternal. They understand this. The big money understands it. and he who has the gold and the commodities makes the rules. And all of the metal is heading eastward. So whether we beat them to the punch and kind of steal their thunder, which wouldn't surprise me, or they do it, I would say and I don't want to go out on a limb, but I will and say, by this time next year, wouldn't surprise me one iota if we saw gold revalued to a level that would shock people. And it's an option that's staring them right in the face, and I think it's hard to ignore. So I'm not one for making predictions like this, but I think it's just too much is happening that is leading this way for it not to be understood that the narrative is being rewritten right in front of us on gold. And now with Russia coming out and saying silver too, and China buying up all the concentrate and the doré all around the world, gold and silver have never been more important. And I hope people are taking these weekly calls we have with a dose of seriousness, because I think this is it. I really do. Getting gold will not be as easy as it once was before this is all said and done, and the price will be much higher as a result of the world understanding that by revaluing it, much of their problems can be washed away. And I think they already noticed that.
AndySchectman highlights concerns over NATO's evolving stance on Ukraine, referencing recent comments by former Dutch Prime Minister Mark Rutte, now NATO's head, who stated that Ukraine is closer to joining the alliance than ever. This position contradicts earlier assurances that Ukraine would not become a NATO member, raising fears of escalating tensions with Russia. Schectman suggests such moves could provoke further conflict, especially given Russia's long-standing opposition to NATO's expansion. Adding to these concerns, Hungarian Foreign Minister Peter Szijjártó, during a press briefing in Budapest, emphasized that any conflict involving Ukraine's NATO membership could trigger the alliance's mutual self-defense clause, potentially drawing member states into confrontation with Russia. His remarks followed a Hungarian-Serbian Joint Economic Commission meeting, where Szijjártó underscored the risks tied to NATO's expanding role in the region. Ukraine formally applied for fast-track NATO membership on September 30, 2022, 7 months after Russia's invasion and subsequent annexation of Ukrainian territories. Support for Ukraine's candidacy has grown, mainly from NATO members in Eastern and Central Europe, including Poland and the Baltic states. In a joint statement following a July summit in Washington, D.C., NATO leaders strongly supported Ukraine's eventual membership, stating that the country is on an irreversible path to full Euro-Atlantic integration. The statement confirmed that Ukraine would be invited to join once it meets the necessary economic security and democratic reforms and member states agree on its accession. Let's get back to the interview.
And then you have the reporting agencies. Remember we talked about Claudia Sahm, the Sahm rule, which is I think 9 recessions in a row perfect record, where if employment rate drops, I think 50 basis points below its 3-month moving average, you're in a recession. And the unemployment rate would have had to have fallen to 4.5% for that to be triggered, as it should be. In September, we get this, again, with the BLS. I mean, we should just take the L right out of this and call it what it is. It's BS. They tell us after, revising 1 million jobs in last year. Now they tell us that in September that they added a whopping 254,000 jobs, the biggest monthly increase since March, higher than average monthly gain, blah, 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 blah. But what they didn't tell us is that they actually increased the number of government workers by 785,000 government workers, the highest monthly surge in government workers on record. Right before an election, complete and total BS out of the BLS. In reality, the U.S. job market shed 458,000 jobs in September. They're called non-seasonally adjusted jobs. Okay, so those would be the kids who went back to college that were, doing landscape work and part-time work and whatever. We added 785,000 government jobs. And to your point, government doesn't produce anything. They just suck assets out of the system, suck profitability. They don't have the profit motive that we find in business, where you do things for a profit motive. There is no profit motive with government. Therefore, it's completely and totally inefficient. And that's exactly what we are seeing here, just this crap and people will believe it, because most of the people who think that the economy is strong didn't even see that they quietly revised jobs down at the end of the year for 2023. It's disgusting. We spent $66 billion on illegal immigrants in 2023 versus $4 billion for homeless veterans. When you talk about priorities being misplaced, and it's crazy. So I think that there are a lot of things going on right now that people should be alarmed about. How about this one from the too stupid to be stupid category? Former Dutch Prime Minister Mark Rutte visited the Ukraine last week, Thursday, just 2 days after replacing the gal who was running the head of NATO. And now Rutte is now the head of NATO. And he says, Ukraine is closer to NATO than ever before, and we will continue on its path until you become a member of our alliance, he said. I mean, when you talk about stupid, are they trying to drag us into World War III? Are they trying to provoke Putin? A promise that Ukraine would never be in NATO. And now you have NATO not only providing assistance, providing weapons, but now they're going as far as saying you're going to be dragged into NATO. This is crazy. So I think it's time that people start to think unconventionally. These are very unconventional times.
As global uncertainties grow and central banks continue accumulating gold, precious metals' role in the financial landscape becomes even more crucial. With rising inflation, labor market challenges, and potential geopolitical tensions, gold's value as a haven asset remains in focus. Investors and policymakers alike will be watching how these factors unfold in shaping the future of global markets. Given the current economic and geopolitical shifts, how do you see gold's role evolving in the long-term strategies of central banks and individual investors? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.